Welcome back to the Futures Edge podcast. I'm Jim Uriel. Today we have a special guest, a commodity broker, analyst, author of one of my favorite books on markets, Higher Probability Commodity Trading, contributor to The Street. We have Carley Garner. Carley, we've done a lot together before, but I haven't in a while, and I've missed talking to you. How have you been?
It's been a while. I don't know what it is with you guys. You invite me on your shows, whatever it happens to be, at the worst times. I think the last time I talked to you on a show like this was March of 2020, and literally the world was melting down. And I tried to get on screen and try to be optimistic, and it was just impossible. But
you can't, there's something, we're going to get to the optimism part too. But again, when we begin this show, we film this Friday afternoon. I'm tired of worrying about all the shit we've been worried about all week. It's almost happy hour. We'll talk about it, but I want to distance myself.
Perfect.
Everything doesn't have to be doom and gloom because we don't have control over these things. So let's establish Carley's credibility. First, what's your favorite comedy movie of all time?
Kingpin. Do you even know?
Very nice call. Yeah. Nice call. Good. Okay. Over the last 2 years, what's the best TV show you've watched?
Schitt's Creek.
Oh, I like Schitt's Creek. It was corny as hell, I thought, but I it's that Canadian humor. I really started to like that eventually.
Schitt's Creek started awful. Like I watched the first couple episodes and I'm like, I hate these people. And then by the end, you're literally like fighting over which one you think is a better person now.
I agree. I don't see how they did that. Yeah. Chris Elliott, I wanted to strangle him. Actually, I mostly wanted to strangle him the whole time in that show. But yeah, I thought it was a very good show though. What did you think about Ted Lasso?
I've never seen it. No idea.
Oh, okay. Ted Lasso's a good one. I'd give it a go.
Yeah. I'm not like a pop culture expert by any means. Okay. Kind of stick to my own little.
Your commodity.
Can I throw something in here, Jim? I have a Carley Garner story I want to throw in here.
Oh no. Okay.
So Carley was kind enough to say, hey, Bob, can you write a foreword for my book? Right. So I wrote a foreword for her book and I was like, of course I was honored by the question. So I put in everything I believe to be great about Carley. And would you believe it? She chose Jim Cramer's foreword over mine.
What?
I don't know why she would do that.
Hey, that's not true.
Maybe Jim has more followers. Maybe Jim draws more eyes to. It's actually a great book. I've recommended it to pretty much everyone.
Well, thank you.
I've actually recommended a handful of your books to everybody who asks me what they should read when they're getting started in futures. You literally kill it. Yeah.
I appreciate that. And for the record, I didn't choose his over yours. Yours was used, just not on the front cover. I mean, listen, I'm trying to sell books here. I'm sorry.
Don't be sorry.
Completely forgiven.
Us. Okay, so let's talk about the broad market to start with. You mentioned doom and gloom. I mean, we've certainly seen a hell of a lot of that. The Fed, obviously a year ago was behind the curve. Are they behind the curve again? I mean, are they ahead of the curve now? Are they tightening too hard into recessionary pressures, in your opinion?
I mean, hindsight's 2020, so we'll have to wait and see before I feel confident about any opinion, to be honest. It's been such a crazy year. That said, I believe the Fed's kind of known for jawboning, and their interest rate policy is more talk, less action, or at least that's how it's been historically. And I think that's exactly what we're getting. They did a really good job of talking extremely hawkish and driving interest rates higher, and the markets have reacted to everything without them really even pulling the trigger. I mean, they have, but at a very minimal amount. And I think the market's overpriced it. And I think so this gives the Fed the ability to, pull back and maybe not follow through with their plan, which I don't think they will. I know this is kind of maybe a unpopular opinion, but I don't think inflation is going to continue at this pace. I think we're going to kind of level out and relax, especially on the commodity side of things. I know there's so many other things that work into that, but on the commodity side of things, if you look at grains, energies, sure, they can hold these in the short run, but in the long run, we've never really seen commodities hold these types of prices, for very long. So I have serious doubts.
I said the same thing on Twitter yesterday. I think the fact that rates have shot higher, the fact that asset prices, particularly in crypto world, but let's just, focus on equity because it's a much greater amount, but asset prices have been absolutely cascading. That's a deflationary pressure too. All that needs to happen, and I don't even think it needs to happen for the inflation story to start to dissipate, is some supply chains working themselves out, which I agree doesn't seem to be happening yet. When it does, I think inflation will be a thing of the past. Is that what you're looking at too?
Absolutely, I agree with you. I mean, we've been doing this a long time, Jim. We've seen it over and over. The story grows louder and louder and louder. And when it's the loudest, it's old news. And I think that's probably where we are. I got to admit, I really underestimated the market's reaction to some of this stuff. I mean, geez, the treasury market really shocked me. Wow, that was a big one. So been caught on the wrong foot a few times this year. It's been a kind of a crazy year, but I think going forward, hopefully we've wiped out all the wild speculation and the panic, and things will hopefully come back to fundamentals in reasonable. I mean, I miss the civilized markets of 2019. I think we were spoiled and we didn't know it.
One thing
Can I
that,
ask you
that
guys
I've
both
been,
something?
yeah,
I want to ask you guys both something. So how much of the 8.3, if you're looking at CPI, and 6.6, if you're looking at PCE, do you believe 4% or 5% of that is supply chain?
no, I believe it's greater than that. Carley, I'm curious as your opinion on that. I would say it's 15 to 20% of it is supply chain. I think there's shared responsibility, government profligate spending, rates being kept at zero, not producing the same amount of energy that we had in the past. And again, it's easy to pick one of those things and blame a villain, but I think it's a combination of all of them. Carley, what do you think?
Right.
I think you're exactly right. I mean, honestly, there are so many moving parts, and I think it even goes beyond conventional wisdom, like supply chain issues, obviously, but we're seeing some weird things. So, for example, today I noticed that if you look over the last like 6 or 7 months, the U.S. dollar and corn futures have settled in the same direction, like 94% of the time. That's really just silly. That should never happen. And what it tells me is there's a lot of the inflation pressures that we're seeing are maybe, I don't want to say speculative, but market reaction as opposed to true fundamentals. So you can see that in crude oil. Like crude oil probably has an $8 to $10 premium just because of all the things that are going on overseas. And those types of inflation pressures are self-fulfilling prophecy or man-made, so to speak. So it's going to be interesting when things normalize and some of the speculative money comes out, which I think is probably going to be sooner than we think. And I can't wait, to be honest.
So here's my question then to you.
Okay.
And again, I can be wrong here. This is my opinion on it. I think the Fed goes twice more 50 and then puts on like a mental hold. I think they'll just say, we're getting close to the neutral rate. We're going to see how things are, kind of like throwing spaghetti against the wall to see what sticks. Does that seem reasonable? Do you have a different prediction than that?
No, I think I haven't, they've given us the dot plot and they've said what they're going to do. I haven't actually like pinpointed where I think they're going to stop, but I think you're right. I think we're talking 2-3 meetings. We're going to be put on pause. And then honestly, the markets are going to love that. Everything will probably kind of buoy higher, treasuries, equities, everything, regardless of anything else going on, because we've already priced in 9-10 rate hikes, which is, probably not on the table, in my opinion.
Okay. So we've had a couple of people like, your personality is just, you're so even keeled and so just nice and kind. We're going to work real hard over the next 10 minutes to get you to say something mean, particularly about the Fed. So it just happens recently that he took soft landing away from his rhetoric, basically a day or two after, and Sri Kumar, who we've had on the show before, Sri Kumar talked about how they might be a little bit politically motivated, but it was basically a day or two after his final appointment was made. Then he started talking about, oh yeah, things are a little bit worse. How politically motivated are they? And if I said the word politically motivated half-wits, how correct do you agree? How much do you agree with that?
I think, okay, so I've spent enough time in DC to kind of get a feel. Like I have friends there. I spent a lot of time there. It is a echo chamber of chaos. So I can guarantee you there's political motivations, even if they're not necessarily conscious, they're there. That said, when I think of, I'm not going to say that the Fed doesn't know what they're doing, but the reality is they are academics. And so they approach things from an academic point of view, and they probably don't understand the other side of it, which is markets are ultimately determined by human emotion and reactions to things. And I think they really underestimate that part of the equation, because they're looking at books and equations and they think there's some sort of mathematical answer to things, and there's not.
It just amazes me so much because I say the same thing. And I say it's almost bumming me out how much we agree on these things. But you talked about, markets, the way markets move in emotion. And people of my age, I know you're a bit younger than I am, but when we think of markets correcting or economic headwinds beginning, we think of the tech bubble and we think of the real estate bubble. Well, those things were a bubble because of market position, and real estate particularly been built up for basically over 30 years. We got to this crazy point where everybody's brother-in-law, who was an electrician, owned 5 homes and was planning on flipping them and selling them. I don't see those excess positions. Just a price of something to me doesn't dictate a bubble that's going to pop. It's got to be market position as well, right?
Oh, absolutely. I think when you see these big giant moves, I think it's almost all market position. Let's say 70-80% of it.
Right.
Like, for example, what we're seeing in the metals, I think that they jumped on board with the inflation story. There's a war, we should be long gold and silver, that kind of thesis. And then when other things started to come in play, higher interest rates, higher dollar, then all those people had to take their money. And then we got into a situation where they're cascading liquidations because they're raising money over here to pay for margin calls over there. And so it's not that gold and silver are this much less valuable today than they were 3 weeks ago. It's just literally people were way too long. They had to sell to make up, pay for other things, put money elsewhere, wherever the case is. So it's all positioning.
Bobby, I want to know, do you consider it a victory? When I got her to say that the Fed doesn't know what they're doing kind of half, is that a victory for me? Do I win that one or no?
With Carley, that's a victory.
Exactly.
Listen, I say and do stupid things all the time, so I don't want anyone calling me out, so I try to play it safe.
I saw some of that in New York.
Stop it.
The real estate market. What are your thoughts? You heard what I just said about my brother-in-law doesn't own 5 properties. Do you think the real estate market is primed for a big pullback, or do you agree with me that it could cool off, but I don't see a big plunge?
Luckily, I think that we as a society and the lending institutions learned a lot of lessons from 2006, 2007. So like I live in Las Vegas, which is literally the epitome of boom and bust real estate. I mean, holy smokes. I had in 2006, 2007, I actually owned 2 homes because I thought I was smart. I upgraded, held on to the first home thinking the market's in the dumps, it can only go higher. And it literally dwindled to like $50,000 this a house. I mean, things were just insane. And so we've all learned lessons. And I think that you're right. I think I don't think that's going to happen. I do think that prices need to obviously stabilize. And I think this big jump in interest rates in a very short amount of time is probably going to take a really big step towards that. And also we're on this side of the country, I know not so much over there, but here the builders are just going full boat. So we've got inventory finally coming down the pipeline, and it's coming fast. I mean, they're building entire communities in 6 months to 9 months. So,
okay, let's get on to metals. What do you think's the overriding theme in the metals markets right now?
I think it's just liquidation is the name of the game. I think it has nothing to do with fundamentals or anything like that. It's, the metals they're a market that there's a small group of people that always want to be long gold and silver. But if you look at over time, it's actually a really sadistic market. It rallies just enough to sucker some of the sidelined players in and then let them down. And it's really a heartbreaking market. It's the one market that if you do want to participate in, it's better to literally just stay on the sidelines until you see a big dip. And those are usually the good opportunities. I think that that's probably what we're seeing now. I think everybody's, as I mentioned before, liquidating to basically raise money and raise cash. But we've seen this in 2020. We saw it back in 2007, 2008. Gold and silver tend to liquidate as the economy is going into recession and people are panicking. But then as soon as all that kind of runs its course, they literally just take off for the races. And I think we're going to get something like that. I think we've dashed everybody's hopes. And once the last seller's out, I think we turn around and go much higher.
So I want to connect a couple dots that we just said before, Bobby. I want you to come in on this too. But we both talked about the Fed and their projections for so many tightenings being overzealous, and that's not going to happen. And then we just talked about the metals markets, particularly. In my mind, I was thinking some gold and silver, particularly because you said sadistic, and I've been just absolutely been whatever the adjective for that by those markets. So are those things connected? Do you think if the Fed goes on hold, then all of a sudden gold and silver could start to rally again? And how does Bitcoin or crypto fit into that?
So I think I agree with you 100%. I think that that's exactly what's going to happen. Once people realize the Fed's maybe not going to do follow the dot plot, I think gold and silver benefit from that. Because the theory is if people can put money into interest bearing assets, why would they hold gold and silver? And so that's why you see that big cash outflow. So yeah, I do think that. And also we have to keep in mind the US dollar, I mean, I don't think it's getting enough attention. It is insane what's going on in the currency markets. The dollar pretty much went parabolic a couple of weeks ago. We've broken up against multi-year highs. And so it's kind of in no man's land. I suspect that because of the pace and trajectory of the move, I don't think it's sustainable. Even though we've kind of closed above multi-year highs, I think that within a couple of weeks, we're going to start seeing that reverse, but I could be wrong. So we'll see what happens. But if that's the case, that should take a lot of selling pressure off gold and silver.
Bobby, what do you got?
A couple of things. So I'm glad you brought up the dollar because I've got a dollar index chart right in front of me. And one of the things I'm trying to understand with the US dollar, and maybe you can help with this, is the traditional or the typical inverse relationship between precious metals, specifically in the US dollars, metals in general, right? But I'm talking about precious here. I think what people might be, I don't think inflation is going to go away. And where I'm going with this is I think that success for the Fed is going to be 4.5% to 5%. And then they're going to have the excuse, and I'm calling it an excuse, of saying, now we have to wait for the supply chain to work itself out. And one of the things I'm seeing both anecdotally and in some of the data is people don't realize what a big part inventory rebuilding is of GDP. And if you have people waiting for the supply chain to loosen up, and I'm really interested in the Las Vegas home thing, can GDP actually ramp up in any meaningful way if inventories can't rebuild? So I see a recession, I see inflation not going away. And during stagflation, because that's what that would be, nothing works. So I'm curious if the dollar is the only thing that then I mean, you're not locking in at negative rates anymore at that point. If we can just get inflation down 2 or 3%, does the dollar become the only safe haven, and does it keep going up? Obviously, technically, I don't even know what you do with this.
Right. One thing that I don't have an answer for you, but I can say the really odd thing about when the dollar was going parabolic a few weeks ago is the same time, and I think it was absolutely a flight to quality. People just didn't know what else to do, and so they went to dollar, and they must have kept it in cash because at the same time, everything else was red on the screen. Treasuries were tanking, stocks were tanking, even some of the commodities were having a little bit of a sell-off. So other than corn and the US dollar, everything was red. So it's interesting. I have to assume that it's sitting in cash somewhere ready to be deployed. So it'll be interesting to see where that goes.
So your experience of looking at precious metals, technically, so the trade I'm going to give out once Jim's done talking to you, and you're welcome to stay or you can leave after that if you want to rest from these insane markets, is going to be a silver long. And I'm scared to death of it. I really am.
Oh.
So like looking at it from a perspective, I mean, I've got a fairly tight stop. If you call a $600 stop tight, from a perspective of metals, there's no real safe place to buy commodities in these environments, is there?
No, if you look at 2020, before silver had a big run, it dropped like $6-7 in a very short amount of time, and then it started making its run. So that's the really tough part about these things. If you're playing with stops, you're probably going to get stopped out. But if you don't have a stop, then you're not going to sleep at night, and you're probably it's going to be too painful. You may panic and get out anyway. So it's really, there's no free lunches there.
Yeah, that's what happened in my RBOB trade. It literally went my way after I got stopped out by about 40 cents.
I mean, these are really tough markets. There's no way winning. And we kind of focus on options. And I'm telling you, it's not any better in the options because the volatility is just so high. If you're doing spreads, even if you're right, you don't make money because the vol just takes away all your profits. I mean, it's really just it's tough out there. But with silver coming into the year, we kind of pinpointed a value zone between 19 and 21. And to be honest, we didn't really think we'd get here that fast. And we weren't even sure we'd get here. So now that we're here, I agree with you. It's really, really scary. But I think maybe the best play might be, unfortunately, there's no micro silvers, but there's a mini silver. At least you can kind of give yourself room for error, because it's very possible, even if we're right and silver bottoms out in this general area, it's very possible we run down and touch the mid 19s first. There's a gap from the middle, like I think it's July or August of 2020. Silver left a gap down there, and that's just, I'm not someone that thinks gaps are always filled, but it's probably a target for some speculators. So I wouldn't be shocked to see that before we turn around.
We're talking about the dollar for a second too. I think that we'd be remiss if we didn't mention, and in the last couple months, as we started to talk more responsibly about our currency, at the same exact time, the Bank of Japan decided that they were going to engage in unlimited QE to peg 0.25% on their 10-year yield. And at the same time, the Russia-Ukraine thing erupts and threatens the entire European economy. So those two currencies make up 70% of the basket, or 68% of the basket. So it was really kind of a perfect storm for the dollar to go parabolic. As the BOJ, do you think that are they going to continue with this ridiculous notion of pegging their rates?
They seem to be wanting to stick to their story. Now, I was just completely off balance in the yen, because I was positioned coming into the year. I kind of expected turmoil in the stock market. So my thought was be long treasuries, be long the yen, looking for some safety. And wow, that just ended up being the exact wrong place to be. So we'll see how it goes. But I actually think, I hesitate to say it, but I think the yen should at least stabilize. We might even start grinding a little higher here just as things work out. Not necessarily because BOJ is going to change, but I think the Fed will change.
And for the people who are watching, the yen, historically has been on the safe haven list. And this time it's just, it's been the worst of the worst. Copper, what are you seeing in the copper markets?
So copper is kind of a bellwether, or at least some people believe it is, and I do too. If you look at copper, what it's done in, for example, 2008, before all heck broke loose, and 2011, and some of the other big corrections, copper is usually the first one to break. In 2020, I think copper started breaking down in January, before stocks were even paying attention to COVID or anything else. And so copper really kind of tells a story. Copper in the last couple of weeks has sold off a little bit, but seasonally that's actually in line with what we would expect this time of year. And we're holding support. In my eyes, as long as copper holds $4, $3.90 area, I think that's supportive for everything. And I think other risk assets start to stabilize. If we see copper breaking down below $3.90, that's when I start to really worry.
Bob, have you been looking at copper, and have you been traded the minis, the micros yet that they launched?
I have, and actually, this trade I'm doing is going to be a mini silver, but I really wanted to find a copper trade, and I just can't find one. Again, so it actually leads me to a question for Carley. But when I was looking at copper today, I'm like, wow, I'd really like to get involved, but I literally just can't find, even with micros, I can't get risk reward right, because when something moves down that far, I can give you targets for the next leg down, but I don't want to short it, and I certainly don't want to buy it. So it's almost like I need some back and fill to short it, or I need some basing activity to go long it. I like actually sort of an economic rebound story, especially out of China with copper, but it's not playing out the price action. So I can't do anything about it.
The China story just baffles me every day. Like, I don't know what they're getting at. I don't know what their point is. If these headlines we're hearing are true, this could be disastrous for the supply chain. That are they really just locking down all these big major cities? What do you guys got? Anything to add to that? Or nobody knows, right?
It seems silly to me, but to be honest, we're talking about a country that literally built fake cities just to keep their economy going. So, I don't think we're ever going to find any good answers for that.
Good. So,
yeah,
Carley,
I wanted to tell. I don't know if I've said this in this podcast before, and I'll keep it really vague. But I have a really close friend who worked for a very large Chinese bank in the New York branch, and anytime there was data out of China, he'd be like, "Yeah, I don't even know if he wouldn't even know if that was accurate or not." He'd always question if it was. So we don't know what's going on there. It's one of those things where you work with the data you have, because it's all crap.
Right.
So
I barely believe our own data coming out of our country. Like, I'm sure as hell not going to believe China's data.
Carley, you still a sneakerhead?
Oh, absolutely.
What's the best pair you bought recently?
I've been loading up on Yeezys. I just can't get enough of them. They're comfortable
Hmm.
and they make it fun, right? It's like a lottery. So the marketing
Yeah.
on those are just ridiculous. So
How many pairs of sneakers do you own?
I mean, I can't even, I don't know, a lot.
Okay.
But Adidas is like they're genius. So what they do is if they have a new pair of sneakers coming out, they say, okay, here's what we got. The lottery starts on X, whatever, on Saturday. You put your name in, you put your credit card, and if you win, they charge you $250 and send you the sneakers. And you usually, it's really hard to win, believe it or not. So every week you're like, shoot, I didn't win, but
I want to buy Adidas
winning,
stock
yeah,
right now.
I know.
Jordan,
It's
Nike
crazy.
does the same thing with Jordans, and
Yeah.
they stole it from Adidas. Obviously, they do the same thing with Air Jordans
Yep.
now. And I only buy Air Jordan 1s. And just for context, Jimmy, I'm not as big a sneakerhead as Carley is, and I have 47 pairs. So going from that perspective, you do the same thing with the Air Jordans. You put your name in, and you put your size in, and which ones. They only drop one at a time. Like I said, I only buy the Jordan 1s, that first pair, different colors. And literally, it's like you're looking on a Saturday morning, like it's actually something you should be excited
I
about.
couldn't be more confused by this conversation. I think the three of us have a lot in common, and this is the craziest thing I've ever heard.
Hey,
But anyway,
I looked
everyone's
at
got
a pair of
everyone's got a
low
vice.
top Jordans that literally have all of the what do you call them? Ace, spades, clubs, hearts. What do you get? The suits. All of the suits from playing cards on the shoes, and they're low top, they're low rise Air Jordans, and I bought them for $125. And the other day they popped up. I'm like, oh, I should get a second pair. And I looked, they're now 515.
Yeah,
Okay.
I
They're
refuse.
used.
Yeah, I refuse to buy aftermarket. That's just a total ripoff.
Yeah, I don't do that either. I'm with you.
I'm not giving people extra money like that. No way.
Okay, so Carley, at this point now, Bobby and I have trades worked up. We love for you to stay and comment on them, but if you want to go too, I know it's Friday afternoon. It's completely up to you, and you can go at any time. You can just hit the button. We'll deal with it. But I wanted to talk about our trades first. Bobby, you ready?
I am.
Okay, so we talked about the dollar and the euro. We talked about the dollar's parabolic move higher. Carley mentioned that she thought it had to be overdone and kind of had to correct itself at some point down. I thought we saw that in the euro over the last couple of days. It tried like hell to bounce back and then failed. So to me, I have not seen a story that's compelling for the euro to bounce back from where it cratered from a couple of weeks back. So this is a trade I do have on. Sold the micro euro at 1.0422, targeting 1.0300 on the downside, and a stop placed up above at 1.0480. So that trade in the micros, I have to put my glasses on. I feel so old when I have to do this. That trade for the one lot in the micros is $150 if you reach your target, and you stopped out, you lose $72. Bobby, do you think I'm crazy or not?
No, so over the weekend, the European Council is releasing their spring economic forecast for the EU. And that often has an agricultural component to it, not always. And I suspect that the war between Russia and Ukraine might adjust that a tiny bit and show some weakness that probably people believe could happen and many of us are expecting. But I suspect that particular report is likely to drive the euro down again. So
that's mostly my thesis, is that we're not done with the bad headlines for embargoes and what it could do to energy and grain and ultimately the European economy, which would cause them to stay being dovish compared to our hawksness. Carley, thoughts if you're still there?
Hey, the trend is your friend, and it has not, this year has not paid to try to fight the trend. So I think you're right.
We
Okay,
closed
Bobby,
yesterday at the lowest level in the euro futures, I think, since 2003.
Yeah.
Those kind of things don't usually just spin around on a dime. They go that low for a reason, and they usually repeat and stay there for a while before they base.
right, and the reason's valid as hell. I mean,
Sure.
We're tightening, they're loosening. What more fundamentally easy could it be? I mean, not that this trade is going to be easy, because oftentimes, as soon as it looks like there's no other way, that's when you get spanked.
Yeah.
But that's why you put it on the micros. That's why you have your stops and you manage it. Bobby, you talked about silver. Let's talk about your trade.
Yeah, I'm literally shaking over this trade. Not really shaking, but I'm scared to death of it. But I bought silver. I bought it around 2097 half. I was really smiling ear to ear when Carley told me her value area, because I'm right in there, right in the middle of it. And I suspect there's going to be a little bit of back and fill in silver. I mean, I never do this within path trading partners because Mike Arnold, who's also very technical, was on the show last week, won't let me. I don't have a buy signal here in silver. I just think it's overdone. I think it's really overdone. The volume today was weak on this little rally, so I probably won't get any help with that. But I'm going to stop myself out of new lows, which would be 2036 half. So, and I'm only looking for 2180. I think it'll probably go higher than that. I think it'll probably go closer to about 2250. So I might bump that target up, and that's when I'll turn around and get stopped out. But this particular trade in the minis risks about $610 to make about 825. Pretty sure I'm going to lose the 610 on this one.
So, I kind of played my hand earlier in the show that I'm long silver, and I've been amassing a long as a dollar hedge / investment. And I know sometimes traders, we joke about, oh, you meant that as a trade, and then you moved it over to the investment ledger to make yourself feel a little better. And there might be some element of that as well. But I have a relatively large position, silver, gold, and platinum. And it is about a dollar hedge. It's about not trusting the stewardship of our currency in the face of things getting bad. Now, the Fed has almost convinced me that I'm wrong, but not yet. And I've not spit out my position so far. But as Carley and I talked about, I think they're going to hit the brakes on tightening earlier than the market is anticipating. And that could finally, at some point in time, put a stop to the dollars rally. And again, I know that my euro trade is lower, but I'm talking about different timeframes here, and support silver and gold. So I'm with you on this. I like it. Yeah.
I also need to point out that interest rates fell from last week. I mean, the 2-year fell by about 13 basis points, 5-year by about 19, the 10-year by about 22, and the 30-year by about 17, right?
Okay.
Which should be, okay for my trade if it were to continue. If we were to continue in that direction. I think short term we will, but long term, I think that's probably why I'm so scared of this trade, because I don't expect rates to stay lower.
Carley, when you look at what happened in Terra and Luna and cryptocurrency world in general, if cryptocurrency right now is going through a period of mistrust, does that support the precious metals?
I mean, in theory, we've been hearing for years that Bitcoin is the new gold, right? But I'm not really seeing any money flowing from one to the other. So it'll be interesting. One thing before I answer that though, I just want to point out, I noticed silver was down 16 days in a row, 16 trading sessions in a row. So
yeah,
Jim, I'm with you.
Carley, thanks.
No, hey, trust me, I'm in the same pain trade. It is a pain trade. It has, when you see that sort of thing, and also I can tell you as on the brokerage side of thing, margin calls are just literally flowing in every day in those markets. And so that's exactly what's going on. So down 16 in a row. And I think if I recall 17 of the last 19 down days, I don't remember any commodity ever. I could be wrong. I haven't run the data, but I don't remember that ever happening before. Yeah, I don't either. So I think you guys are on the right foot there with things bouncing back. As far as the Bitcoin gold thing, honestly, I've never been a real believer in Bitcoin. I believe in the technology. I don't believe in any particular coin itself. And so I think that what I think is interesting is that, we talk about the wealth effect in the stock market, but what about the wealth effect in crypto? I mean, those people, I've heard all kinds of stories. I even know some, which tells me it's probably a lot more than you think out there, that quit their jobs and they thought this was their retirement account and things are going poorly. So it's going to be interesting.
I think it was one of the reasons we were having trouble attracting people back to the job market. I think was part of what all the crypto bros thinking that they're going to make money in trading, which, by the way, they all think, oh yeah, we're two-way traders, but everybody's a genius in a bull market when assets are going higher. And then when markets are going two directions is when you see who's really good at this. And we'll see, I would suspect.
Yeah.
Let's talk about equities. I've seen, 2 months ago, I said down 20% in the S&P, down 35% in the NASDAQ. Yesterday, we just absolutely down ticked 20%, but I'm not quite ready to call it over yet. I think we need a signal of some sort from the Fed that there might be blue skies ahead. Carley, thoughts on that?
Yeah, I mean, from a charting perspective, I too had my eye on the 20% area, and we're toying with that. I think from a charting perspective, I think if we can close above 4,000, let's say early next week, I think that's good enough for maybe a bounce to 4,300. But I too am not thinking we're looking at all-time highs yet. I think it's going to be really rocky, and we may have another trip down before things stabilize.
Okay, here's my trade. And full transparency, I have this trade on, but not exactly like I'm going to lay it out, because I took off some options and let my short hedges be more than they were at this level. But I didn't actually sell the June micros at 40.40 when they bounced up there late in the day on Friday. So they're going to sell at 40.40, a target of 39.50 on the downside, and a stop placed above at 40.80. And I know for you guys who were trading on Friday that it traded up to this level, it cratered, then it came back, and I'm planning on doing it again if it gets there. Bobby, any thoughts?
I think you might get stopped out.
You think so?
Yeah, I think you're going to get filled, and I think you might get stopped out. And the reason is just something typical that we watch at Path and that I watch personally is we have a rotation zone on every single chart. And I think we're likely to move back up into that rotation zone, and the top of it comes in about 41.60 or so. And I'm calling a medium-term bottom over the next week or so. I don't have it pinpointed. I don't have a basing pattern yet, but I expect, so going by the definition of a bear market, which is 20% down from all-time high, and we don't come out of a bear market till there's a new all-time high. So just going by titles, I expect both the Nasdaq or the S&P and the Dow to go into a bear market before this whole thing is over. So that puts the Russell down over 30%, the Nasdaq somewhere down in the range of 30%. But as we all three know from our experience, the bear market rallies are some of the fastest, most painful for the shorts that you can possibly see. And I suspect that's what's coming. So I like that you're waiting for a rally to sell it. I just wish you were waiting for it to go a little higher.
And I get it. And bear market rallies can be
They're
absolutely
awesome.
just nasty. Yeah. So, yeah. But I actually had one. The one we had on Friday. We were up 110, 120 at one point in time, and that was nice. And I had some okay stuff on for that too. I didn't make a king's ransom, but I made a little bit. What else you got for Carley, Bobby, before we let her go?
I finished my drink. You never asked her, but I know the answer to this question already. Dogs or cats, Carley?
Oh, dogs, beagles specifically.
Oh yeah, Frankie, right?
Yeah.
He's one of the most famous trader dogs on the planet.
Frankie's famous.
Love
Frankie was on RFD TV once.
Really?
Yeah. For her birthday.
Fantastic. Yeah. It's fantastic. Good. And have you had other dogs besides Frankie, or just a one dog?
This is my second beagle, and I'll never get it. I don't know. Beagles are just fun. They're hard.
Yeah, they're sporty dogs, but they're small enough. I like beagles.
Exactly.
Cool. Yeah. Good. Well, this has been great. Again, it's Carley Garner, one of my favorite analysts, author of Higher Probability Trading. If you guys haven't read it, you should soon. Carley, where can they follow you on Twitter?
The handle is at Carley Garner, CarleyGarner. Check me out on Twitter. I do post dog pictures, so if you're an animal hater, then maybe it's not the place for you.
If you're an animal hater, you can
stop
go to hell.
Watching this show.
Thank you. Yes.
And stop watching the show.
Unsubscribe. We don't want you.
Perfect.
Good. Oh, this is good. I've enjoyed this one a lot. Thank you very much, Carley. Really
Thanks, guys.
And one thing that's always kind of fun to me is like when to end any Zoom call or podcast, there's that kind of uncomfortable spot. And it's like you're 14 talking to your girlfriend and you're like, no, you hang up. No, you hang up. So I'm always the first to hang up.